What up? Hope y'all are doing well. Today is Wednesday. It is 2:50 p.m. and in this video I will be taking a look at Bitcoin. I'll be doing some analysis on this local range, or it's not so local anymore. We've been trading in this range since the middle of August, but we have recently kind of gotten this dump down. Seems like we may be, re-entering this range after kind of deviating the high of it. So I'll be doing some analysis on this range, maybe coming up with some trading plans, and then taking a look at the local stuff. So about 51 minutes ago, we had the FOMC meeting. That was at 2 p.m. Nothing really happened from it on the charts. We saw more volatility leading up to the FOMC than we did after it dropped. So far, nothing really has come of that. We did see a pretty aggressive move to the downside earlier in the day, though, and tomorrow we have potentially another volatility event. We have the CPI numbers dropping at 8:30 a.m. Eastern, so there is a chance that we see some more volatility tomorrow. Now, taking a look at what has happened here with Bitcoin, we put in this high on October 2nd, and I actually posted a video the day that we put in that high. I was looking at that potentially being a swing high in this video titled "This Could Be a Swing High," and I'm in a quote-unquote juicy short. And the term juicy is subjective there. It's not about the size of the position, but it's about how you use it, and I think I managed that position pretty well. If I can recall, okay, I couldn't recall, but luckily I made a video about this trade. So yeah, now I remember how I got into this. So this was kind of a weird position. I kind of traded an SFP, even though we didn't necessarily get an SFP. It was a close above the last higher high on most time frames. I'm talking about this wick right here. But since it was a 3-tap Wyckoff model, potentially, it was looking like a Model 1, I decided to short this basically on the reclaim of that high, not really checking if we got an SFP on all time frames. And if I remember, we didn't see an SFP really on any time frames here. It was a close on pretty much all of them. But I was monitoring this position, and if it started to go against me, I'd close it out at, maybe a small loss, maybe a break even. But I never saw a reason to close it. Basically, from that high, we began a downtrend, and I closed this trade out once the downtrend flipped back to bullish, which was right about here, I believe. So I entered on, let's say, 15-minute market structure, and I exited once that market structure flipped bullish, which wasn't until we closed above this wick, because this was an SFP, so the actual break was somewhere right around here. That is where I exited that trade, and from there, I wasn't able to get another short trade up near these highs, but I did enter a small little short scalp over in this area. I suppose I'll talk about the local stuff first, and then we'll get into the higher time frame stuff. But yeah, this was just a simple 5-minute market structure trade. Basically, we had a market structure break right here when we broke this lower high, and I followed 5-minute market structure down, and I entered on this supply retest. So following the 5-minute structure, we had formed this area of supply, basically this last retracement. It was, a market structure leg, but there was also this smaller zone of supply in that larger supply, and we came up to mitigate that. We saw a move away. I was looking for a low time frame market structure break in this area, which is why I had that high marked out. Unfortunately, we front ran that ever so slightly. So on the lower time frames, we didn't get a market structure break here, not even on the 1 minute. It was just kind of like a straight shot up, and then I entered once we started dumping down, which is why my entry is all the way down here. And basically the reason I was looking for shorts in this area is because, originally we had a bullish flip here, right? We broke the 5-minute downtrend, I would call this, even though this is a very tight retracement leg. It's barely even 5-minute structure. So, we had a low time frame market structure shift here, and that ultimately shifted back to bearish right here, since this was, at the very most a 5-minute market structure leg. Then I'd want to pay attention to the 5-minute market structure, and if that goes against me, then, well, this bullish break is basically invalid because it just flipped back to bearish. And from there, we did get a move into some demand zones. Like, I think that first wick right there might have gotten a move into that demand. Doesn't actually look like it, but essentially demand was not holding. We weren't seeing a flip back to bullish. And so I just decided to go with the bearish structure and look for the next, potentially lower high in the 5-minute. And, the larger context in this case was that we just lost the range low. So this was a range that we've been trading in since the 3rd of October, so like 7 days. And we had lost that range. Then the, bullish break that we got was not getting follow through. We basically just flipped it back to bearish. So, based on all of that, I think it made sense to look for shorts in this area. And I still treated it as a scalp. I locked it in pretty quickly. I think my first TP was down at these local lows. And essentially my plan at this point is to follow this 5-minute market structure on the way down. And if that flips against me, then I will close this trade. So this actually is the lower high because this wick went lower than this wick ever so slightly, at least on Binance. I think on Bybit it was different, but basically, this lower high and this lower high are so close that it doesn't really matter. But if we get a convincing break above this 5-minute lower high, and by convincing, I also want to take out this high and get a clear close above it. And if that happens, then I'll close out my short trade. So that's essentially my plan for that. And real quick, going back to this video that I posted, why I thought that this up here could be a swing high. The reason is because we did get a move into a significant area. So we came up to tag supply. Now, we didn't get a, deep mitigation of this supply, as some people would say. We just tagged it ever so slightly here. And, I was looking for us to get another move to the upside potentially to put in a better high. But, like I said in that video, there's potential that this was, all the mitigation that we needed. Maybe we just come up, just barely tag supply, and then reverse from there. So I was looking at that as a possibility. And what would really confirm that for me would be us breaking market structure following that mitigation. So we did have a very low time frame market structure breakup in this area. Let's actually take a look and see what time frame it was. So I would call that 30-minute, potentially a 1-hour break. Yeah, I would maybe call that a 1-hour break. So we did have some market structure break here, but it was not the highest time frame. So if we go to the 4-hour, there are a few market structure points that we could pay attention to here. Now, here's where things get a little tricky because everything in this area is internal market structure on the higher time frames. And we know that. That's something I've been talking about for a long time. We know that on the move to the downside following primary structure, we essentially just put in this lower high before this lower low, and now we are trading in between these 2 points. So in terms of primary structure, everything is internal. And if we want to look at market structure inside this range, we're going to be looking at a lot of internal structure. So there are a few ways to look at this. I would pull market structure from 3 points here. Number 1 would be from this low, number 2 would be from this low, and number 3 would be from this low. And I will explain why that is. So first, going from the actual low, we put in a high, put in a higher low, and then the next time that we touched the high was right here. So we essentially have 4 points here. And, in this market structure drawing, the higher low is right here. So, that's unfortunate. The higher low in this market structure is very, very close to the actual low of the range. Not very helpful, because if we're waiting for this to break to then target this low, what's the point of that? By the time we close this candle, we probably would have already taken out the low, so that is not very helpful. But what we can do now is take market structure from this low and look at the internal market structure, or in better words, look at the market structure of this internal leg. So doing that, we have a low, we have a high, a higher low, and a higher high. So again, this is not a great market structure point to look at because by the time we break this with a close, again, we are very close to the low of the range. I mean, at that point, we are well below the midpoint of the range. If I just pull a fib here roughly to wherever that high is, and I turn on my range, the midpoint of the range is right here. So, that is probably going to be like a 0.65 retracement, something like that. Let me actually turn on my fib again, and yeah, it is the 0.65. So, not a great place to look for confirmation for a short up here, right? Now, sure, it's possible that we break market structure and then following that get a retrace, and from here, maybe there's a good short opportunity, but it's not the best, so maybe we can come up with something better, and that is why I have this low circled as another place I would pull market structure from, basically looking at the market structure of this internal leg. Again, take this with a grain of salt. At this point, you're going 3 times internal, so you have to ask, how important are these market structure points? Well, considering there's nothing else really to go off of following market structure, I'd say kind of important at least, but not the most important for sure. But anyways, taking the structure of this internal leg, we have something like this, where the internal higher low of that leg is right here. And this is the low that we actually just came down to SFP. So we got a wick down below that low. Now, is this the most important thing? Just because we SFP'd that low, do I think that this up here is now a targeted high, since this was the high that produced the move down to that SFP point? Not necessarily, but potentially if we see some kind of internal market structure break bullish here, it could produce a move to the upside, and maybe it does come up for this high, maybe to try and put in a higher high into that supply range. That's possible, but I definitely would not bet the farm on it, but it is an idea that we could pay attention to. But at the very least, this gives us some kind of a better understanding, or maybe a reasoning for why price action is doing what it's doing. A lot of people probably just look at this as like, oh, there might be stop losses down here, so we just ran those stop losses, and maybe we get a bounce from there. But you could technically look at it as if we just SFP'd a market structure point, even though it is far from the most significant market structure point there is. But with that being said, I think if we start to close down below this low, things would start to look more bearish in my opinion. And the reason for that is because, one, yeah, this could technically produce some kind of a retracement here if we SFP it, if we continue to SFP it, that is, like if we can't get a candle to close down below here, like high time frame one, then there's a chance it produces a move to the upside, especially if we start breaking this internal structure, which right now looks like the lower high is probably right here. And also, this is kind of like the last low before we start to tackle some of this liquidity that we have over here. And that was a horrible arrow, but I just learned this trick from Tom Crown. I can do that, and we have a much better arrow to look at. So right below this higher low, we've got some liquidity. And the reason I say that is because we put in this low and never took that low out. In fact, we just continued to put in a bunch of higher lows in this little area before getting an aggressive move to the upside, meaning we probably left a lot of stop losses down below that area. And now I have to change this again, but there's probably lots of people that long to this area that still have their stop losses in or below these lows. So I think that is one reason to come to the downside. And I would probably expect that if we start to close below this low. And below that, we have a fair value gap, basically, some more liquidity to the left and some more poor lows over in this area, just some more lows that did not get taken out yet. So now I want to look at a few more things. Number one, I want to look at the volume of this larger range. So pulling the fixed range from that low, we can see that we have just gotten to move down below the value area high of the range. So we had a little support resistance flip going on here where we found resistance on the value area high and then held it for support for a while. And we just broke that bearishly, basically. We broke back into the range. So that is something interesting to note there. And potentially, if we do see a retracement after this SFP, maybe it just brings us up to this value area high, and maybe it becomes resistance again. This area that acted as support for a while could now be flipped into resistance. So that is interesting. Another thing is that the point of control of this range is right around this area of liquidity that I was looking at. So potentially we do see a move down into this area, maybe sweep that liquidity. And, if the point of control holds, maybe from there we start getting a retracement to the upside. Potentially at that point we make our way back up to the value area high. So, looking at this from a value area perspective, we have just broken back into this range bearishly after attempting to break out of it, which is not a great sign and kind of makes me think that ultimately a rotation back to the low end of the range is likely. And the question is, if we do rotate down to the low end of this range, are we going to maintain this range, or is there reason to go much lower? And I mean, the fact that, number one, the value area low is sitting right on top of a fair value gap makes me think we're probably not just going to stop at the value area low. I mean, it's possible, right? We could bounce from there, but I think it's more likely that we just fill this gap, this inefficient price action that we have right here. And if we start to fill that fair value gap, would it make more sense to get a bounce and reclaim the range, and then from there continue on trading in the range, maybe attempt another rotation back to the upside? Or would it make more sense to just take out these lows and grab that liquidity that has been sitting there for so long? I think option B would be the more probable one. Maybe I'm getting a little too far ahead of myself here. I'm just kind of brainstorming some potential scenarios, but based on what I'm seeing, I think it does make sense for us to continue to the downside here and start taking out some of these points that I marked out. Number 1, number 2, number 3, number 4. Are we going to hit all of them? I don't know, but I think it makes sense to. I would not be surprised if we do. All right, let's take a look at local price action, because I had an alert go off few minutes ago, and that alert was us breaking this 5-minute lower high. So potentially there could be a long trade here. Now, we did actually get a move to close a 5-minute candle down below the new break of structure line, which would be this wick, or I guess on Binance it would technically be this wick, because this wick went a little lower. But either way, we did get a 5-minute close. Let's see. It was not a 15-minute close, though. So still an SFP on the 15-minute. And let me go ahead and delete this value area because, I don't know about you, but this vertical line that's always on my chart whenever I have a fixed range pulled up is quite annoying, and it can mess with my analysis if I'm trying to look at market structure, because it can cover up a wick. So I don't like the fact that the value areas have that gray line that just sits on your chart when it's not loaded in, like when you're too zoomed in. I wish they would change that, but anyway, I think this is an SFP on pretty much all time frames other than the 5, but let's just double check to be sure. So yeah, it was a 2-hour SFP and a 3-hour, and the 4-hour has not closed yet. So I'd say since, the 3-hour to the 15-minute has closed as an SFP, if we see something convincing with this market structure break, like I would not call this a convincing break yet, this looks very weak, but if we continue to see follow through and then maybe get a nice retest with some market structure, I would probably consider a long trade considering we got this SFP. So that's kind of what I'm looking at locally, and if we get that significant follow through, I may just close out this short position as well. It's been a pretty decent winter considering it was just a scalp trade that I took on internal 5-minute structure. So I'll continue to monitor that. And, again, if we do get a bounce from here, if this ends up producing some kind of an uptrend, I talked about the levels that I would look at for resistance, probably would be this range low, because that was the value area high, if I remember correctly. And yeah, so that was where the value area high was. So yeah, I may look for a long scalp back up to this range low. And, if we reclaim the range, maybe I can hold it for longer, right? There's a possibility that this ends up just bringing us way up here. But I think right now the main idea is just to scalp it up to this area, which should now be heavy resistance. And we do even have like a little supply zone / order block in this area. Let's actually take a look at 1 hour structure here. So yeah, the 1 hour structure, the lower high is all the way up here. So a retracement back up to this area could just be to put in a 1 hour lower high, and maybe we continue this 1 hour downtrend. So yeah, that would make sense. Looking for a scalp up to that area, and then maybe looking for a new short in this zone. And very quickly before I get out of here, let's just look at Market Cipher. So, very quickly going over it, daily money flow just turned back into the red. Let's zoom in on this. So yeah, it just kind of barely got over the zero line, got a little blue wave going there, and then it just turned back down into the purple. We did not get any bearish divergences on this high though, so not looking super weak in that sense, but the money flow turning back down is definitely concerning. We did not get any divergences on this high on the 4 hour either, at least in terms of momentum and money flow. Money flow put in a higher high. Now, granted, the money flow kind of continued to rise as price put in a lower high. So, the fact that price wasn't really respecting what the money flow was doing is a bit interesting. But yeah, at this point, the 4 hour money flow has now turned into the red and is continuing to drop. It is not showing signs of curling back over just yet, so that makes me think that we possibly have more downside pressure. Now let's zoom in a bit more and see if we can see the money flow starting to turn around on any time frames here. So the 2 hour, I would say no. It is actually turning down sharper now than it was before. The 1 hour is curling up, but overall it is continuing to put in lower lows here. So that is not really looking good either. 30-minute is still putting in lower lows, but just barely. The 30-minute money flow got very deep over here, which what's back here in price. And I mean, it's been in the red for a long time, so maybe that is a sign that we are overextended to the downside. But considering that like the 4 hour to the 2 hour, even the 1 hour still look like they have room to the downside, I would not be surprised if this 30-minute just stays in the red for a long time. So yeah, basically looking at Market Cipher, it seems like we probably have more room to the downside. I wouldn't really expect things to turn around right here. And, like I said, if we do start getting a retracement to the upside from here, I think the money flow kind of backs up my idea of this just being a 1 hour lower high. So yeah, money flow kind of backs up my bearishness as well. We're not getting the follow through that I'd like to see. So yeah, that's something to note there. Not trusting this 5-minute bullish break quite yet. And I mean, unless we see a very convincing break on the next attempt at the high, this looks more like we might just be ranging right here, where maybe we revisit the low, revisit the high, kind of mess around here, and then from there choose a direction, whether it be up or down. But, if I see some kind of bullish development that really catches my eye, then maybe I'll be interested in longs here. But, if not, I will be more than happy to just hold this short if we're going to continue dumping. Alright, well, thank you all for watching this. If you enjoyed the video, I'd much appreciate a like and subscribe. The support goes a long way, and I will see you all in the next video.